How do companies make finished goods?
What documents are used in the process?
Most importantly, what specific transaction cycle is it?
Today, we will be talking about a very important cycle in the accounting information system, the conversion cycle. This is Eliza Guelas
And L'Oreal Somoson. This is ACCOmelon.
ACCOmelon. The conversion cycle is one of the 4 transaction cycles used by accounting systems that records one economic event, the consumption of labor, material, and overhead to produce a product or a service. This is also known as the production cycle. Here we have the conversion cycle. The revenue cycle information system provides the sales forecast and customer orders that are used in the plant production and inventory levels. In return, the conversion cycle information system sends the revenue cycle information about the finished goods that have been produced and available for sale. A purchase requisition that indicates the raw materials needs is sent to the expenditure cycle information system. In exchange, the expenditure information system provides the raw materials acquisition and other expenditures such as overhead. Information on labor needs is also sent to human resources cycle, which in turn provide the data about labor costs and availability. Finally, the conversion cycle provides the general ledger and reporting system data about the cost of goods manufactured. Not to forget, it reports to the management. The first step in the conversion cycle is the product design. The activity produces 2 outputs. First is the bill of materials that specifies the part number, description, and quantity of each component used in the product. Second is the operations list that specifies the steps to follow in making the product, what equipment to use, and how long for each step. The objective is to design a product that strikes the optimal balance of meeting customers' requirements for quality, durability, and functionality, and minimize production cost. Product lifecycle management software improves the design process by making it more efficient and effective. It allows the designing and testing in 3D models, simulates the production of products, and management of data concerned with product engineering specs, and those that facilitate redesign and post-sale maintenance. A poor product design drives up costs in many ways. That is why accountants should participate in the design activity to identify areas that cause failure, identify alternatives to cut costs, and suggest redesign to improve quality. This is the second step in the conversion cycle, whereas its objective is to develop an efficient production plan that meets existing demand and expected short-term demand while minimizing inventories of raw materials and finished goods. What are the 2 common methods of production planning? Just remember 2 words, push and pull. Push manufacturing, or commonly known as manufacturing resource planning 2, and pull manufacturing, also known as lean manufacturing. What are the key documents and forms associated with production planning? There are 4 documents that are produced by production planning. One of those is Master Production Schedule, which is used to develop a detailed timetable that specifies daily production and to determine whether raw materials needs to be purchased. The other 3 documents that planning and scheduling activity produces are Production Order, which authorizes the manufacture of a specified quantity of a particular product, Materials Requisition, which authorizes the removal of necessary quantity of raw materials from the storeroom to the factory location where they will be used, and lastly, Move Tickets, which identify the parts of raw materials being transferred, the location to which they are transferred, and the time of transfer. Notice that many of the documents used in the production cycle track the movement and usage of raw materials. Why? That is because it is one of the objectives of the production planning and to prevent the occurrence of theft. Finally, accurate production planning requires integrating information about customer orders from the revenue cycle with information about purchases from suppliers from the expenditure cycle, along with information about labor availability from the payroll cycle. On the other hand, the threats associated with this step is over or underproduction, which could be mitigated with effective production planning systems and proper approval and authorization of production orders.
The third step in the conversion cycle is the actual manufacture of products, which varies greatly across companies, differing according to type of product being manufactured and the degree of automation used in the production process. Most firms today use computer integrated manufacturing or CIM, wherein it uses various forms of information technology in the production process, like robots and computer controlled machinery. On the contrary, accountants need not to be experts in every service of CIM, but they must understand how it affects both operations and accounting. Said that the threat associated with this step is the theft of inventories and fixed assets, which could result in overstated asset balances, which can lead to erroneous analysis of financial performance. Whereas it could be prevented if physical access to inventories is restricted, all internal movements of inventory is documented, proper segregation of duties, proper access controls and accountability tests, and periodical count of inventory on hand of an employee without any custodial responsibility. Moving on to the final step of the conversion cycle, which is the cost accounting system. Objective of this activity is to provide information for planning, controlling, and evaluating operations. Second is to provide accurate cost data regarding pricing and product mix decisions. Third is to collect and process information used to calculate inventory and cost of goods sold for financial statements. So, paano nga ba na-achieve itong mga objectives na to? Simple lang. AC, allocation and classification of costs. Under allocation, two costing methods are widely used. The first one is the job order costing, which is primarily used by companies that deliver unique or custom jobs. So it assigns cost to production batches or jobs. The second one is the process costing, opposite to the job order. It is used by companies that provide standardized products and allocate costs to work centers. Cost classification is divided into four categories. First is raw materials usage, which is represented by materials requisition forms. Second is the direct labor cost, which originates from job order document that consists of the amount of time invested by an employee on a specific job. Third is the machinery and equipment usage, which are often in conjunction with labor costs. Lastly is the manufacturing overhead costs, which are expenses that are untraceable to specific jobs. Take note that the cost accounting system must be consistent with the established production planning techniques. The main threat within the activity is the threat of inaccurate cost data, which may be controlled by reconciling cost data and all production costs. Another solution is the use of activity-based costing, which enhances cost allocation in an attempt of tracing costs to activities that create them. In addition, one must ensure that cost accounting is separate from the work centers to reduce fraud. To sum up the discussion for today, the conversion cycle comprises four activities. Product design is the conceptualization of a product. It produces the BOM and operations list, which are then used in production planning, along with sales forecast, customers' order, and information about raw materials, labor, and finished goods. Outputs of the planning phase are the purchase requisitions, production orders, and the material requisitions. However, the main document produced here is the MPS, which answers how a product is produced and when it is produced. Pertinent documents then move to the next activity, production operations, where the actual conversion takes place. Here, documents to properly allocate costs are provided: job order, move tickets, material requisitions. Lastly, cost accounting, using documents from the other activities, assigns and allocates costs to be used in reports and back to the design activity. So that's for the production cycle. Feel free to rewind or go back to the specific part of the video that you find difficult. Till next time!